following is a technical analysis on ZIM Integrated Shipping Services, a company of the industrial sector in shipping ports based upon the daily interval, as this was a request from a subscriber. And by no means is this financial advice, especially in overbought conditions, although these are unique developments that are transpiring here within the technical realm, where the analysis is based solely on technical aspects, and I have not dived into the fundamentals, and it is essential to note that technical analysis provides probabilities, not certainties, as there are no guarantees within the financial markets. Feel free to reach out via email for additional analysis requests. And here we are pertaining to a key significant development within the structure of this stock. And we have a well-defined 3 outside bullish continuation pattern, completely gapping up, overcutting its 50-day and 50 exponential moving average. And that is a well-defined bullish continuation pattern on one of the more outer layers of the technical realms of the daily interval, in which they could exceed in overpowering some of the near-term intervals. And that is as good and as aesthetically pleasing as a 3 outside up bullish continuation pattern as you can possibly get there. And that is a well-defined breakout, in my opinion, a breakout above the 50-day moving average, issuing in a buy signal. And we are additionally taking out this primary reactionary downtrend line, call it multi-year price resistance, with a just major reactionary highs really across the entire sphere here. And that has been taken out with conviction, where we ended up having a breakout, had a false breakdown, back tested it, second day in a row there, and it has been off to the races. That is a well-defined breakout off of a primary reactionary major high downtrend line that you can possibly get there, with additional just a complete unfilled gaps really across the board here. And these would be the additional targets that I would hone in on, especially if you took out the breakout above the 50-day moving average, where you would have additional price support around this key $8, $8.30 range. And again, we could even have a slight pullback back down to the primary reactionary downtrend line, which would look really insane. The beta in each direction as far as the stock is moving, that would be down for another a 20% crash pullback, double-digit 20% crash pullback, and you never would have thought that it would still sustain a bullish sentiment, whereas that would provide the greatest risk-reward long trade entry, if not an add-on to your existing long trade position, for an additional move right back up to the 12.57 price resistance, call it the bottom of the gap support, for a 30% in gains, up to a complete backfill of the gap, coinciding in confluence of the 200 and 200 exponential day moving average, for a 40.8% in gains, up to another additional unfilled, unchecked gap, 1614 price resistance for 70% in gains, up to 1747 on a complete additional backfill of the gap for 84% in gains. And if things were to get exceedingly bullish, right back up to the 2257, the last unmarked, unchecked gap, which would be good for 135% in gains. Talk about a great risk reward long trade setup if and when we were to have that additional pullback. But again, especially if you took that 50-day moving average breakout, you're in a well-defined position here with 43% in gains. Taking out half of the gains and additionally adding on to that key inflection point would be pivotal at all costs. Whereas short sellers, bear traders, they want to see a complete rejection here. Potential, maybe even a tag of the 1257, 1336 price resistance, especially the top of that dual price resistance level, would additional add on what I would call a very aggressive short trade setup. When you take in account for how extreme some of the healthy conditions are being poured back into these technical momentum indicators, I would be exceedingly wary about shorting and or setting up a short trade position against this stock that has broke out with key technical momentum indicators churning to the upside, and the magnitude and the velocity of the oscillator histogram, huge green infused candle closes above its zero line threshold. We have yet, make no mistake about it, that has been the utmost, most powerful move that we've seen in the oscillator histogram within the daily time frame since its inception of its IPO there. And there has been nothing more bullish in sentiment from the oscillator histogram than we have seen in the current near-term moment. That is as powerful as an early indication as you can possibly get there, with well-defined breakouts above its zero line thresholds here in a bullish crossover off the moving average convergence with a huge divergent low, had positive and or bullish divergences, really equal RSI, exaggerated positive divergences, and multiple 3 out of the 4 technical momentum indicators. And that is bullish as you can possibly get for a paradigm shift and or complete structure for the stock, as healthy indicators are being pushed back into the trade. And when you consider the velocity at which I had additionally shorted the top of this key inflection point after the fastest rate hike move in history by the Fed, where we ended up breaking down from this key inflection point, ended up having a counter trend rally, and that was good for an additional 68% crash move to the downside. By no means now where our short sellers and or bear traders much like the Palladium video, in which short sellers may reconsider covering profits due to a substantial surge in technical momentum indicators, the convergence of technical factors suggesting that a potential rapid rush to cover shorts, similar to a stampede towards emergency exit doors. Brace for the possibility of a bullish surge reminiscent of a bull stampede in the streets of Spain.